morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, July 6th. Hope everybody enjoyed their long July 4th weekend here in the States. Yesterday we had a little bit of a pause, pullback. We had a gap down. It's pretty much went sideways. That's what happens when these gap downs and gap ups. It really kills the day trading opportunity of high probability trading. And again, that's your cue as professional to sit back and wait for that high probability trade. So let's get back to the markets here. What are we looking for? Well, we have FOMC minutes that come out today at 2 o'clock. We got non-farm payrolls numbers that come out at 8:30. So we have two big risk events that's going to definitely move gold, the dollar, and equity markets. So we need to really pay attention closely to that. I think we need to get through the two risk events and really see the direction of where this market is going to be headed. Now, we had a 5-day rally off of the Brexit lows. And we almost rallied 100%. But the thing is, we failed to make new highs, or at least we didn't even challenge the highs. We still made a lower high. That's a concern to me. And also, a lot of my trading model is on a sell signal, still on a sell signal, looking for a bigger move lower. We could still challenge the highs, and our trading model would still have it on a sell signal right now, at least right now. Um, I'm going to show you a couple of key points, and I want you to be aware of. Remember, guys, if you're getting chopped up in this environment, stop in for the trading room, the TMT Dark Pool Trading Room. $49 introductory offer. Price is going up. So I just want you to be aware of that. Take a look at it. Give it a trial. 49 bucks. You can't beat it. It's a high probability trading signals off of our automated trading program. It's pretty amazing stuff. And again, if you're having problems in this market, definitely come by, give us a shot. Also, what I'm showing you in this video is very limited. It's a free video. We put our premium video, extensive internals. We show you exactly just about what our trading model is about, along with some actionable trading areas of support and resistance. So check that out as well when you get a chance. All right, so put call ratio, this is inversely correlated in a sense. When we have high readings of put calls, that's when the market usually bottoms, and vice versa. When the markets are really low, we have very bullish sentiment of 50, 60, 70. Markets usually see a top. Now, we haven't seen that here, right? We did it on the Brexit vote, but look, we're 124. Plenty of room to run to the upside. So that means that there's plenty of more selling that can come before we become oversold, all right, in the put call ratio. Our trusty NYUD, I've been showing you guys this for quite some time. Lower lows, lower highs continues. We broke back above it, but now we're back below zero. This is not a good sign, not a healthy sign. Breadth of the market is telling us, and this is only one. There's many I look at within my trading model, but you could see here, failed to make new highs, yet again. So this to me this right now is back on a sell signal from breaking back above zero. If it took out this high and this kind of went up and then went back down again and created and lost this bearish symmetry, that's a different story. To me, this is not. This is telling me that I'm weak. The internals continue to be weak, and markets are rallying and rallied off the lows only because of our famous and great friend, the algorithm and the HFTs. That's all it is. Here is the. Let me just kind of get this back up again. All right, here is the bullish percent. I wanted to show you this view. It is on a sell signal from back up in here. You could see crazy wild ride, but I want to tell you this is still on a sell signal. So again, guys, internals are not healthy, and this is based on a point and figure chart, very reliable charting. And if this can't break back above and start taking out this little swing high here, all right, about 67, I think the markets will fail. And then start to really go down and take out lows, and I think that's going to happen. Why? Take a look at. I want to show you this. This is a bullish percent gold miners ETF. Since this has been incorporated and actually invented or made, if you will, on stock charts, it has never seen 100%. That's telling me that money is flowing out of equities, okay, and into the safe haven trades such as gold, silver, copper, and of course the US dollar. And I'll show that to you as well. Does the dollar affect gold and copper prices? Of course. But at the moment, they're both trading in sync as one. Eventually, if the dollar really were to rally hard, you would get a knee-jerk reaction to gold. Again, I also put this out in a special edition video, which I'm putting out today as well on gold, covering gold and oil. This here is at 100%. I personally, if you are looking to get involved in gold at 100%, meaning that 100% of all stocks are up in the gold miners ETF. Okay, I would say, guys, take a step back, wait for a pullback, let the gold miners ETF reset itself before you go higher. Now, can it continue to go higher? Sure, but all good things come to an end. I love gold. I think gold is starting a whole new bull market, but there'll be plenty of time to buy gold at deeper prices, deeper discounts to where it's trading at right now. Okay, so here's the gold miners ETF. Let's take a look at the GLD. You can see up here outside of the Bollinger Bands, way outside of our proprietary price channels. Step aside, guys. You got two gap areas that need to be filled. Even if it got back to 123, 125, you're overboard already. Again, not a sell signal, but this is not a time where you want to be looking to buy any stock, ETF, or any asset class rather when the RSI is back up about right around 75, 80, and MACD's screaming, "Sell me." So be careful. If you're long, I protect your gold trade. And if you're not long, I would not be long at these levels. Just want to show you the flight to safety, what's going on. Silver, straight up vertical, guys. Okay, again, look at where the RSI is. Do not chase. Let it come back in because it will come back in. Okay, this, by the way, this is a seasonal time of year where the metals actually become weak. But again, with this uncertainty, what's going on with Brexit and all these other uncertainties out there, money's flowing into these safe haven trades. All right, the dollar. We have the UUP ETF breaking above the 200 with a bull flag. If this thing gets some steam, it would again make a knee-jerk reaction to the metals. But again, this is money flowing go into the dollar. And I mentioned to you down here and here, don't count the dollar out because of uncertainty. Look what happened. Bam, there's the Brexit vote. And look, now we're back up. This is going to take out new highs. If we take out the swing high here, I'll give you some upside targets on the dollar. And then we need to watch gold. All right, VXX. This is the VXX, which is the ETF for the VIX. I love buying weakness on this VXX yet again. This is really important, something that you guys need to kind of take a look at. Making a higher low from this previous low. This is yesterday's candle. They sold them off again. But we need to be careful here because if we do get any type of weakness, they're gonna sell this volatility and even take out the lows. Anytime we take out these lows down here, I would be looking to buy volatility. All right, spiders. You can see here back up above, not challenging the highs at all. Still making a lower high, even though we had this big move. Lower high, lower high, lower high. That is not a good sign for me. If we were so strong, this is going to be the ticket here. This is what we're going to be looking for. If we're going to flag, it's let us bull flag, right, into the average. Maybe we come down again another day, and then we see what happens. Because remember, markets like to shock the masses, meaning fool the masses, meaning the retail. So if we flag and we hold this 2050, and then we break out to new highs, that would be a shocker to all of the shorts. Everybody would scramble. We trade to new highs, and then we would reevaluate it. And even if we trade to new highs, guys, I would still be looking for the downside correction. And that's how it works here. Markets are crazy. I had important low to watch, 202.75. This is just clean price. The next area is going to be this new target here. And I'm going to change that, but I just want to show you that 199 or 199 and 198 and a half. But you can see it clearly. Lower lows, lower highs, heavy resistance because we're right into supply here, okay? We're basically in range bound. Now, if we, like I said, flag into here and then break out, that's a whole different ballgame. They'll catch all of the shorts wrong. And remember, there's nothing good about this market at all. There is absolutely nothing good. Earnings are dismal. We're coming into earnings season again. Analysts have reduced earnings estimates by 5+%. Nobody's making any real money. And the markets are fully valued at 17.8 times earnings. So why would you buy the market? Only because of the Fed. It's all Fed induced. It has been since 2009. You have to be careful because at one point in time, the Fed can't do anything anymore. Okay, and that's why I say be careful. Day trading, a little different story. You pick out your best spots, you look for your spots. But when you're starting to build a portfolio, you got to be very careful. 60-minute, just want to show you we do have some upper end and some areas of resistance. And again, we put this out in our premium video. Real good actionable areas. 30-minute, just want to show you Bollinger Bands are starting to tighten again. And I'd be looking, so you could see we had the gap down sideways. We did nothing yesterday, and I think we're going to do nothing again today until after the FOMC minutes. Transports, really, guys, this is the the Mac Daddy of all charts here. This is the leader, deemed the leader of all the 5 indices. Look at this: lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Does that tell you anything? Is there anything bullish about this? Absolutely not. I think you need to be very, very careful here. And again, we could break back above it. If I see the transports break above and take out two swing highs here, this swing high and this swing high, and this swing high, then I would say, well, you know what? We might have a change of sentiment, change of direction here. IWM, again, really ugly looking chart. Secondary leader, you could see here, lower lows and lower highs. Again, the reason why I'm showing you this is to let you know here's evidence here that the markets are starting to deteriorate. If you looked at the Nikkei, the DAX, the London FTSE, the French CAC, you could all see them that they're all breaking down again. Again, too much for the free video. I don't want to be late. It's already 11 minutes into it, but I just wanted to let you guys know, to give you a heads up. Watch out for your portfolio, your longs. Oh yeah, and when the market does rally and rallies to new highs, don't think we're going to go to new highs. And if we do, we go to new highs temporarily and the market sell off again. That's my cue at the moment. Okay, and again, things do change rather quickly, but when it does, I will of course keep you informed. Sorry about the long video, but I wanted to get this out to you guys since we didn't have a video since last Wednesday. Have a great day, enjoy the day, and be safe out there. Take care. We'll talk to you tomorrow.